One goal you may set for yourself is to increase your net worth, which can assist you in securing a secure financial future. And one frequent approach to increase your worth is to invest in various appreciating assets that can increase in value significantly over time. No one can foretell the future, but these assets have a decent probability of assisting you in amassing money. So, here are 10 assets that are currently more valuable than cash. Hello guys, and welcome to Luxury Society. Number 10. Real estate. Investing in real estate is probably one of the most frequent appreciating assets from which many people have acquired wealth. Single-family homes, multifamily residences, commercial real estate such as office buildings, and even land or farms are examples of this. Typically, this entails making long-term investments and renting out the homes or even listing them on services like Airbnb. However, you may also buy houses to restore and resell for a profit. The purpose of real estate as an appreciating asset, on the other hand, is to hold on for the long haul so that the value has increased dramatically over time. While real estate tends to appreciate over time, it still carries a number of dangers. There was a housing bubble in 2008, which resulted in a significant depreciation and a large number of foreclosures in the real estate sector. Although the market has recovered, don't assume that your real estate assets are risk-free. Number 9. Individual stock. Stocks, as we all know, are assets that can increase in value over time. Rather than investing in the entire stock market, you might focus on the top stocks within it and avoid laggards. Individual equities can react to economic conditions in a variety of ways. For example, during recessions, publicly traded video game companies, healthcare providers, and discount services can grow, whereas resources and residential real estate enterprises can suffer. Individual stocks may also react to financial reports, management news, pending sales, acquisitions, and other events. Thousands of equities are available to investors in both large and minor stock exchanges. For example, blue-chip stocks are well-known and trustworthy corporations such as Coca-Cola, Walmart, and the Royal Bank of Canada that trade on major stock exchanges. Furthermore, investors may not always be able to sell their shares since they're less liquid due to lesser activity. As a result, you could buy a stock for $0.05 and see it appreciate to $0.50, but you may not be able to sell it. Number 8. Starting a business. Starting your own business can be time-demanding, stressful, and expensive upfront, and even with excellent execution, it can fail. Starting a business, on the other hand, can bring in a lot of cash, increase your net worth, and turn your property into a major appreciating asset in the future. There are also a plethora of enterprises you may start, particularly online, that have lower starting costs but can significantly increase your income. Naturally, not everyone aspires to be a business owner, and that's fine. Consider how many millionaires and billionaires did not come from a family of riches. Many people become wealthy as a consequence of their own firm's success or through the sale of their company years later. Of course, it's through several streams of income that you'll be able to build a substantial amount of wealth. However, beginning a business can be a valuable asset. Number 7. Oil. Oil is one of the most common speculative investments. This is an asset whose value rises or falls in response to economic conditions, political turmoil, and investor opinion. Oil is a vital component of the world economy. It's the basis for a variety of fuels, including gasoline for vehicles and planes, plastics, consumer goods, and even asphalt. The Middle East supplies more than 60% of the world's oil. When there is unrest there, as it frequently does, markets fear a drop in production, and prices rise as a result. Oil prices have historically risen in tandem with economic growth as more of it is consumed. Although rising oil supplies in the United States as well as worldwide environmental consciousness have cast doubt on commodities' future. However, oil can be purchased through shares in oil-based energy firms, oil funds, and oil options. These are all assets that increase in value in tandem with the price of commodities. Number 6. Gold. Gold has always been a safe haven for the wealthy's money. It's understandable because gold retains its worth even when paper currency is weak. The wealthy have repeatedly proved their ability to live by simply purchasing massive quantities of this prized metal. The good news is that there is a gold for everyone. If you only have a limited quantity of money to invest, coins are a good option. Those with a lot of money can buy bars in a place like Switzerland and store them there. The wealthy do not store huge amounts of gold in the United States, where current legislation states that the U.S. government has the power to inspect and rate gold-containing safes in a crisis, make it one of the few countries in the world to do so. It happened once previously during a time of economic crisis under Franklin D. Roosevelt. This is why the wealthy make a concentrated effort to keep a significant portion of their assets abroad. Number 5. Self-storage units. Recently, there has been a significant increase in the number of self-storage facilities available around the country. There are around 60,000 facilities in the United States, with more on the way. For real estate investors, self-storage is an appealing investment option. It has cheap upkeep costs and requires little development. In fact, many self-storage facilities don't even require employees. Renters can gain access to their units by entering the facility with a specific PIN or key. Self-storage spaces don't require much emotional investment, and the leases are only for a month. This permits investors to benefit from any rent increases that occur as a result of each new lease. Number 4. Industrial real estate. When the economy is healthy, industrial real estate such as factories, warehouses, and distribution hubs gain in value. It, on the other hand, is more technologically advanced than office and retail properties. While many businesses are moving to the internet, many of their products are still tangible and require storage. While businesses may choose to utilize websites for payment and drones for delivery, they still require a storage facility. Direct ownership rights and property funds are two ways to invest in industrial real estate. Number 3. Commercial real estate. Strip malls and office buildings are examples of commercial real estate that can rise in value while simultaneously producing passive income. Since it's rented to enterprises, it usually performs well during periods of great economic performance. Commercial properties, on the other hand, can be extremely volatile. A single vacancy can wreak havoc on cash flow. Furthermore, when businesses relocate to the internet, there may be a drop in demand for the asset class. Even huge grocery stores, traditionally thought to be immune to the internet, have been impacted, as illustrated by Amazon's 2017 acquisition of Whole Foods. Direct ownership rights, private placements, and property funds are all options for investing in commercial real estate. Number 2. Farmland. Farmland is one of the best income-generating assets for a variety of reasons. Unlike many other types of investments, farmland doesn't have the same level of volatility. Since it offers a necessary resource, food, farmland has a minimal association with the stock market. As a result, demand for farmland has stayed relatively constant over time. Investors interested in benefiting from this asset can adopt one of two techniques. To begin, you can buy a property outright and lease it to a farming firm. This method will demand research to ensure that the land is in the right location and that the tenant is trustworthy. Another option is to invest in a suitable platform or a crowdsourcing platform that focuses on agriculture and farmland. Remember to complete your research on these companies before investing, since there may be hidden costs that lower your earning potential. Number 1. Cryptocurrency. A cryptocurrency is a type of digital currency that keeps track of who owns it in an online ledger. It's a highly speculative investment and thus a potentially valuable asset. People who were early crypto investors have made hundreds of thousands of dollars, according to numerous accounts. In 2009, the very first cryptocurrency Bitcoin was founded. In general, it's obtained when computers perform difficult algorithms known as mining and are rewarded with Bitcoins as a result. The coin can also be bought on the open market and through a number of different online exchanges. Since then, many new cryptocurrencies have sprung, many of which have witnessed rapid growth. However, the asset class is confronted with significant challenges. To begin with, cryptocurrencies are designed to be opaque. Buyers and sellers transact anonymously, making it difficult or impossible to track transactions. In fact, cryptocurrencies are frequently used as a medium of exchange for illegal activities such as tax evasion and narcotics trafficking. However, the stock market and Bitcoin are becoming increasingly correlated, suggesting that Bitcoin prices are linked to general economic success. So, what asset out of the list are you going to start with? Start commenting on your answers in the section below. With that being said, do drop this video a like, subscribe to Luxury Society, and push the bell icon. See you soon!